Good day everyone. Welcome to another video lecture in Intermediate Accounting 2 with the topic Land, Building, and Machinery. So I am your presenter for this video, Ma'am Jazel May C. Del Monte. Now let us start with the statement classification of land. So how do we classify or present a land? Well, it depends on how the entity would intend to use the land. So say for example, if the land is used as plant site, so the land shall be classified as a property, plant, and equipment. But if the land will be held for currently undetermined use, so as a review in your topic, investment property, so this particular property of course is classified as an investment property. If the land held definitely as future plant site, okay, so still that will be classified as property, plant, and equipment. Land held for long-term capital appreciation, the same with those that are currently with undetermined use, so that will still be classified as an investment property. And last but not the least, land held for current sale by a real estate developer, such land shall be classified as an inventory. Now let's have the cost chargeable to land. So when you purchase a land, so what are the specific costs that can be capitalized as part of the cost of the land? Okay, so of course that includes the purchase price, the amount you paid to the seller. Second, legal fees and other expenditures for establishing clean title. Third, broker's commission. So these are the brokerage fees. So the amount that you paid to your agents or brokers, shall I say. And the next is escrow fees. Now, what do you mean by escrow? Escrow is a legal arrangement in which a third party temporarily holds large sums of money or property until a particular condition has been met, such as fulfillment of purchase condition. So again, it is a legal arrangement given to or assigned to a third party, wherein temporarily you are going to deposit the money or the property to that particular third party, and temporarily the third party will hold it until the purchase conditions are met by the both buyer and seller. So whatever fees paid under escrow by the buyer, such cost shall be part or capitalized as part of the cost of the land. The fifth one is the fees for registration and transfer of title, cost of relocation or reconstruction of property belonging to others in order to acquire possession. So those are cost of relocating the existing tenants or existing occupants in that particular property. Next is mortgages, encumbrances, and interest on such mortgages assumed by the buyer. So take note of this, not all mortgages and encumbrances and interest can be capitalized, but only those assumed by the buyer. Next, unpaid taxes such as real property taxes up to the date of acquisition, and take note, should be assumed by the buyer. Next, cost of survey, payment to tenants to induce them to vacate the land but not to make room for the construction of new building. Next is cost of permanent improvements such as cost of grading, leveling, and landfill. And last but not the least, cost of option to buy the acquired land. And take note, dapat ang option or the results of the option is that the buyer is really certain of buying the land. For the option price or option cost to be capitalized as part of the land. So let's have the land improvements. So the treatment for land improvements depends on whether subject to depreciation or not. Now, if the land improvement is not subject for depreciation, then it shall be included as part of the land account. Examples are cost of surveying, cost of clearing, cost of grading, leveling, and landfill. But if such land improvements are depreciable, then such costs shall be accounted separately as land improvements, and this will be depreciated over their respective useful life. Examples of depreciable land improvements are fences, water systems, drainage systems, sidewalks, pavements, cost of trees, shrubs, and etc. Special assessment. Special assessment are taxes paid by the landowner as a contribution to the cost of public improvements. Such special assessment shall be treated as part of the cost of the land because public improvements increase definitely the value to the land. So again, special assessment shall be part of the cost of the land. Real property tax, generally it is treated as an outright expense. But again, if such real property tax accrued on accrued on the date of the acquisition, as of the date of acquisition of the land, and it is assumed by the buyer, then such taxes shall be capitalized as cost of the acquired land. And take note, until or up to the date of acquisition only, or the amount that will be capitalized will be up to the date of acquisition. Next, costs chargeable to the building. So there are two major way of acquiring such building. We can purchase it or we can construct it. So what are the costs chargeable to the building purchased? So that includes purchase price, the legal fees and other expenses, unpaid taxes up to the date of acquisition, still nagapay real property tax assumed by the buyer, interest, mortgage, liens, and other encumbrances on the building assumed by the buyer. Next, payment to tenants to induce them to vacate the building. And lastly, any renovating or remodeling costs. So these are the costs chargeable to building when purchased. How about when constructed? So that includes, of course, the material, labor, and overhead incurred, the building permit or license, architect fee, superintendent fees, cost of excavation, cost of temporary buildings used as construction offices, and tools or materials shed. So take note, temporary buildings used as construction offices or storage. But if that will be a permanent building, well, that will be accounted separately from the one you constructed. Next, expenditures incurred during construction period, which includes the interest on construction loan and insurance. So the example of this is the borrowing costs. And next is expenditures for service equipment and fixtures made a permanent part of the structure. So meaning to say, this service equipment and fixtures are really part of the blueprint of the building. So permanently part na sila, so attached sila. Therefore, shall I say, immovable sila, class. So pag immovable, that should be part of the cost of the building. Next, cost of temporary safety fence and subsequent cost of removal. So pag temporary safety fence, that could be part of the cost of the building. But if it is a permanent fence, that is land improvements. And last but not the least, safety inspection fees. So sidewalks, pavements, parking lots, and driveways. So if it is part of the blueprint, then it will be part of the building. But if it is not part of the blueprint or occasionally made or incurred lang, then it will be accounted separately as land improvements. Building fixtures, it depends on whether movable. Pag movable, it will be separated from the building, so it will be part of the furniture and fixtures, while if immovable siya, then it will be part of the building. Ventilating system, lighting system, and elevator, it depends on whether installed during construction. So if it is installed during construction, then it will be part of the building. Otherwise, if it is installed after the construction, so it will be part, or it will be accounted separately as a building improvements. Now, let's have the PIC interpretation. So what do you mean by PIC interpretation? So it deals with how do we account the cost allocated to the building. Like say for example, you purchase land and building. Okay? So you purchase land and building, and then the question here is how do you account the amount, the carrying amount allocated to the building, and at the same time the amount of the net demolition cost if you intend to demolish such old building. So PIC means Philippine Interpretations Committee. Okay? So paano nila ininterpret yung standards, okay, in accounting those particular costs. So let's have first land and old building acquired at a single cost. So ano lang siya, isang parang basket price lang ang land and building. So it depends on whether the old building is either usable or unusable. So take note, pag usable, of course, pwede pa siya magamit. Okay, we can observe on its physical feature that the old building can still be used regardless if the entity would really use it afterwards or i-demolish siya. Basta as an evaluation, we evaluated that such old building acquired is still usable. So if usable ang building, then the single cost shall be allocated between the land and old building. So there will be a carrying amount that will be allocated to the old building. But if unusable na ang building, then such single cost shall be allocated to the land alone. So wala nang mapupunta sa old building. Okay? Again, pag usable, you have to allocate. But if not usable, proceed directly to the land, or you give the total cost or the total purchase price to the land. Now, if in case that the building is usable, okay, if the building is usable, of course there is an amount that is allocated to the old building. Now, if the old building is usable but the entity intend to demolish immediately to make room for construction of a new building. Okay? So, ito ang nangyari. Usable siya, however, the entity decided to demolish it because there will be new building to be constructed within that land. So, that is the situation. So, pag ganyan, how do we allocate the allocated carrying amount of the old building? So it depends on the accounting of the new building. Now, if the new building is accounted as PPE or investment property in the future, once it will be finished, any allocated carrying amount of the usable old building is recognized as a loss. Again, if the new building is accounted as PPE or investment property in the future, then such carrying amount is recognized as loss. Next, if the new building is accounted as an inventory, such allocated costs or allocated carrying amount of the usable old building is capitalized as cost of the new building. So, i-add siya as part of the cost of the building, particularly as part of the inventory. Again, if matapos na ang construction ng new building, yung allocated carrying amount niya will be included as part of the cost of the new building. Again, depende no sa accounting niya. If the accounting is for PPE or investment property, the carrying amount shall be recognized as loss. Otherwise, if inventory siya, it will be part of the cost of the new building. Next, accounting for demolition costs minus salvage value, or we call it as a net demolition cost. So, ang net demolition cost natin is equal to demolition cost less or minus the salvage value. Now, regardless of the classification, such net demolition cost shall be part of the cost of the new building. Whether if the new building is classified as either PPE or investment property or inventory, such net demolition cost shall be capitalized as cost of the new building. If the old building is demolished just to prepare the land for intended use other than construction of new building, okay, the reason why you demolish the old building is not for construction of a new building, but rather for other use. Okay? For other purpose. Well, such net demolition cost shall be capitalized as cost of the land. So, hindi na siya sa cost sa new building. Okay? So, that is for the allocated carrying amount and net demolition cost. Now, entities owned building demolished to make room for the construction of a new building. So, ito ang nangyari dito, existing siya na old building or owned building of the entity. But they decided to demolish it to make room for construction of a new building. Now, regardless of the classification of the new building, the carrying amount of the old building shall be recognized as loss. So, wala na yung PPE ba siya, investment property ba siya, or inventory. So, the carrying amount of the old building to be demolished will be recognized as loss. Now, the net demolition cost shall be capitalized as cost of the new building, regardless of the classification of the new building. Any payment to tenants to induce them to vacate the old building shall be capitalized as cost of the new building, regardless again of the classification. Okay? So that is how the PIC interprets the standards on regarding land and building. So here's the summary again. For the carrying amount of the old building, depende ang iyahang recognition sa classification niya sa new building. If PPE or investment property, it will be recognized as loss. On the other hand, pag inventory siya, it will be capitalized to the new building. So now let's have this one. An example or sample problem. So we have 3 questions here. What is the cost of the land, building, and land improvements? So which among here that includes or that are included as part of the land, building, and land improvement? Okay, so let's start with cost of land, which include an old apartment building appraised at 200,000. So we have 2 million. Okay, so this is part of the land. Well, you may ask that, ma'am, there is an old building there. Why is it we did not allocate the cost of the building the cost of the old building to the building. Well, even if wala siya nag-specify, but we will assume that such building is unusable. So, pag silent ang problem, it will be assumed that such old building is unusable. So, meaning to say, no need to allocate for the cost of the building. So, all of the purchase price will be allocated to the land. Next, legal fees. This is included as part of the land. Payment of apartment building mortgage, land pa rin. Cost of raising, payment of delinquent property taxes, okay, land pa rin. Cost of raising the apartment building or cost of demolition. So, this is under the building. Okay? And proceeds from sale of salvage material, building ni siya, pero i-minus. Okay? It will be deducted from this demolition cost. So, net demolition cost natin is 25,000. That is 30,000 less 5,000. Next, grading and drainage or drainage on land site. This is land. Architect fee, of course, this is building. Next, payment to building contractor. This is, of course, building. Interest cost on specific borrowing. Okay, borrowing cost. This is included as part of the cost of the building. Payment of medical bills of employees accidentally injured while inspecting building construction. Well, this is immediately recognized as loss in the profit, expense in the profit or loss. Cost of paving driveways. This is land improvement. Cost of trees, shrubs, and other landscaping. Land improvements pa rin. Cost of installing lights in parking lot, land improvements. Premium for insurance. Okay, of course, this is expense diretso. Same with the medical bills. Expense na siya. Cost of open house party to celebrate the opening of building, expense pa rin. So, how much is the cost of the land? So, that includes 2 million plus 10,000 plus 50,000 plus 20,000 plus 15,000. So, that is 2,095,000. For building, 8 million ang kanyang construction cost plus 200,000 plus 300,000 plus the net demolition cost nga 25. So we have 8,525,000. And last but not the least, for the land improvements, that includes 40,000, 55,000 plus 5,000 for a total of 100,000. So that is for the land, building, and land improvements. Okay? Next. So another problem is this one. So you need to get the cost of the land, building, and machine. Okay, let's start with cash paid for purchase of land. Of course, this is part of the cost of the land. Mortgage assumed. Okay, assumed by the buyer. Still, that is land. Realtor's commission, land pa rin. Legal fees, land pa din. Amount paid to relocate person squatting on the property. Okay, that is part of the land. Okay, land ba yon? Of course, that is land. Cost to relocate or cost of relocation, that is part of the land. Cost of tearing down an old building, this is for building. Inet natin sa amount recovered from the salvage of the old building demolished. Yan, minus 150. Building pa din. So, net demolition cost natin is 50,000. Cost of fencing the property. So, we'll assume that it is a temporary fencing. So, this will be part of the building. Amount paid to the contractor of the building constructed. Building pa din. Building permit. Building. Excavation. Building also. Architect's fee. Building. Interest that would have been earned had the money used during the period of construction been invested in the money market. Okay, wala na siya. Appeal. Next, invoice costs of machine acquired. So, this is part of the cost of the machine. Freight or unloading and delivery charges, cost of the machine. Customs duty, machine pa din. And last but not the least, allowances and hotel accommodations paid to foreign technicians during installation and test run of machine. That is part of the cost of the machine. So, how much is the cost capitalized to land? That is 2.5 or 2.5 million plus 1 million plus 300,000 plus 50,000 plus 100,000 equals 3,950,000. For the building, the cost of the construction is 5 million plus 110 plus the net demolition cost na 50 plus 50,000 building permit, excavation 50 also, and 200,000 na architect fee. For a total of 5,460,000. And last but not the least, for the cost of the machine, that includes 2 million plus 60,000 plus 140 plus 400, total of 2,600,000. Okay? So that is for this particular sample problem. Next, so let's proceed with the cost chargeable to machinery. So, when machinery is purchased, these are the costs to be capitalized. That includes the purchase price, freight or handling or storage and other costs related to acquisition, insurance while in transit, installation costs, cost of testing and trial run, initial estimate of cost of dismantling and removing the machinery for which the entity has present obligation, fee paid to consultants, cost of safety rails and platforms surrounding the machine, and last but not the least, cost of water device to keep the machine cool. So these are the costs that are capitalized as part of the cost of the asset, particularly the machinery. So, particularly, if machinery is moved to a new location, what will happen to the undepreciated cost of the old installation costs? So, if before the end of the life of the machinery, it so happened that it was transferred to a new location, such undepreciated cost of the old installation cost shall be expensed immediately. So, pag napay nabilin nga installation cost undepreciated, i-expense na siya diretso. While new installation cost, of course, shall be capitalized as part of the cost of the machinery. If the machinery is removed and retired to make room for the installation of new one, removal cost not previously recognized as a provision shall be expense. If previously when you acquired the machinery, initially acquired the machinery, such removal cost is included as part of the cost of the machinery. Okay? Pero pag hindi siya na-include before daw sa costs of the machinery, then such cost of removal will be expensed immediately. VAT is not capitalized, is not capitalizable charge to input tax. Okay, of course this is not capitalized and therefore charged directly to input tax pag value added tax. Tools. Okay, so tools should be segregated from the machinery account. So we need to account it separately, not a machinery but rather tools. So these are this may be hand tools or safety tools. Okay? Patterns and dies. These are of course these are molding patterns or dies. So how do we account these dies? If used for regular products, then such patterns and dies shall be recognized as asset. But if used for specially ordered products lang, then it will be expense immediately. Cost chargeable to equipment. So when the equipment is purchased, these are the costs to be capitalized. That includes purchase price, freight and handling charges, insurance while in transit, installation cost, and other costs necessary in preparing them for the intended use. Returnable containers. If in big units or of great bulk, such returnable container shall be accounted as property, plant, and equipment. If small and individually involve small amounts, other non-current assets. If not returnable, then such container shall be expensed outright. Examples of returnable containers. When you are engaged into water refilling station, so you have returnable containers or returnable gallons. So sila, those gallons that are returnable shall be when big or in great bulk PPE, but if not, other non-current asset. Capital expenditures. Most capital expenditures shall be recognized or classified as an asset. While if these expenditures are related to revenue expenditures, then these are expensed immediately. Subsequent costs. So how do we recognize the subsequent cost of this machineries or this asset? Of course, we have to recognize such asset if it is probable that future economic benefits associated with the subsequent cost will flow to the entity. And the subsequent cost can be measured reliably. Now, if such subsequent cost will increase the future service potential of the related asset, then such cost shall be capitalized as cost of the asset. But if the subsequent cost will merely maintain the existing level of performance of the asset, then such subsequent cost shall be expensed immediately. So take note in order for that cost to be capitalized, dapat mag-increase yung performance or capacity or service potential of such asset to make it capitalized or to be part of the cost of the asset. Now, these are the examples of or indications that there are future service potential on this, or there's an increase in the future service potential of such asset. It extends life, it increases the capacity, and improves the efficiency and safety. So those are the indication that there is an increase in the future service potential. So what are the different subsequent costs? These are the additions, improvements or betterments, replacement, repairs, and rearrangement costs. For the additions are modifications or alterations which increase the physical size or capacity of the asset. There are two types of additions. We have entirely new unit, or an expansion or enlargement or extension of the old asset. Example of this is at first you build a one-story building, but subsequently nag-extend mo og second floor, third floor, and so on. So that is an addition or expansion. In either case, such cost of addition is capitalized. Now, how to depreciate the addition subsequent costs? If that is a new unit, it shall be depreciated over its respective useful life. If that is an expansion, it shall be depreciated over the useful life of the expansion or the remaining useful life of the entire asset, whichever is shorter. Improvements or betterment. These are modifications or alterations which increase the service life or capacity of the asset. Okay? When addition increases the physical size, the improvements or betterments increases the service life or capacity of the asset. So such cost of improvements or betterment is capitalized, of course, and the improvements that do not involve replacement of parts are simply added to the cost of the existing asset. Replacement. This involves substitution, but the new asset is not better than the old asset when acquired. So it's just replacing the same degree of quality of the old asset. Okay? So there are classifications of replacement, and of course, each classification has a distinct recognition. When there's a replacement of old asset by the new one, such replacement cost shall be capitalized. If the replacement is related to a major part or extraordinary repairs, then that replacement is capitalized. But if the replacement is for minor parts or ordinary repairs, then such replacement cost is expensed immediately. Rearrangement costs. This is the relocation or redeployment of an existing property, plant, and equipment. And such rearrangement costs are expensed as incurred. Okay, again, relocation costs shall be expensed immediately. Next, accounting for major replacement. So when there's a major replacement, so how do we account for such replacement? So depende if separate identification is practicable, meaning to say we can identify separately the item or the asset being replaced. So if that is the case, we debit it to the asset account, and the cost of the part eliminated and related to accumulated depreciation are removed. So the cost and its related accumulated depreciation, and the carrying amount or the remaining carrying amount of the old part is treated as a loss. But if separate identification is not practicable, then current replacement cost shall be discounted. So now let's proceed with the sample problems on the machinery and of course the subsequent costs. Now, here's the problem. During the current year, Sodo Company made the following expenditures relating to machinery and equipment. First, renovation of a group of machines at a cost of 500,000 to secure greater efficiency in production over the remaining 5-year useful life. The project was completed at year end. Second, continuing frequent and low-cost repairs at an amount of 350,000. Third, a broken gear on a machine has or was replaced at a cost of 50,000. So what total amount should be charged to repairs and maintenance expense? So you are asked how much will be the amount to be expense and not the amount to be capitalized. So among the three, the first item is, of course, that is renovation of a group of machine with a cost of 500,000. That is, of course, capitalized because its purpose is to secure or to increase the efficiency in the production. So that is for betterment. So that is capitalized. Second, continuing frequent and low-cost repairs. So this is a regular repair. So this shall be expense. So included sa ato ang repairs and maintenance expense ang 350,000. And last but not the least, replacement of broken gear. So broken gear is a minor part of the machine. So that is expense immediately, 50,000. So the total expense natin is 350,000 plus 50,000 for a total of 400,000. So that is the amount of the repairs and maintenance expense. Next, what amount of expenditure should be capitalized? Okay, so let's start with service contract on office equipment. So, nakakontrata na siya. So, regular maintenance na siya. So, it shall not be capitalized or expense siya immediately. Initial design fee for proposed extension, of course, that is capitalized. New condenser for central air conditioning unit. This is a replacement. However, normal lang man nga replace ta og condenser in our air conditioning unit. So this is ordinary replacement. Purchase of executive chairs on decks, furniture and fixtures included ni siya. Purchase of storm windows and screens and their installation on all office windows included pa din or capitalized. Sealing of roof leak in production area. This is repairs and maintenance. Replacement of door to production area. Replacement but an ordinary one. So, repair and maintenance. Installation of automatic door opening system. That is capitalized. Overhead crane. Capitalized. Replacement of broken gear. Repairs and maintenance. So how much is our is the expenditure that should be capitalized? So that includes 150,000 plus 200,000 plus 500,000 plus 200,000 plus 350,000. All in all, the amount of expenditures that should be capitalized is 1,400,000. Okay? So that is for the machinery and equipment. And so, that's the end of our discussions. I do hope that you have learned from our discussion and you could be able to apply this one in the future. Thank you so much and have a good day. Bye!